Thank you everyone for your participation in our webinar. This is an introduction to R&D tax. There is an upcoming deadline for the R&D tax incentive. So we just wanted to get the message out there to anyone who is not already familiar with the program or who needs a little refresher. Some of the key points to think about the process and what the R&D tax exactly. This presentation is non-specific in nature. So if you have any questions around your specific circumstances, then you should talk to your R&D advisor, such as myself, or if there's certain advice and things like that, obviously. So Fullstack Advisory, we're a full-service accounting firm, chartered accounting firm that is headquartered in Australia. We're really specialists in the startup space, entrepreneur, those kinds of things, high-tech company. And so we're across all the kind of all the programs that are suitable for those early stage companies. And we really know all the tricks, all the ins and outs for startups. So this webinar is being recorded. We will provide a recording and slides post the webinar. If you have any questions, please feel free to pop them in the question and answer box at the top of the screen. And I will either answer them as I'm going through. I do check them from time to time. Otherwise, I'll have some time at the end to answer any questions that anyone has. So the agenda, we're just going to go through the R&D Tax Basics and Eligibility, a little bit about the compliance and record keeping, and then a short segment on the R&D Finance, which is a complementary. So here at Fullstack, we see the R&D Tax Incentive as part of a holistic funding strategy. So there are other government incentives that can assist, and the R&D Tax Incentive is a really crucial part of that funding strategy. So just to reiterate, there is an upcoming deadline for companies who wish to claim R&D tax for the 22 financial year, 1st of July 2021 through to the 30th of June 2022. You have up until 10 months after the end of the financial year to submit the application form. So this year it is the 2nd of May, and that is the application form. If you have expenditure calculations or the schedule, that can be done after, but the most important thing is having that application form submitted by midnight on the 2nd of May. So R&D tax scheme is the Australian federal government's broad-based scheme to incentivise experimental research and development activities being conducted in Australia. It's been going on for quite some time in certain variations. Previously, it was the concession, but the R&D tax incentive has been going for 12, 13 years at this point. It's a very stable program that is really essential for those early stage companies and startups. So there is a process to go through. You need to obviously establish whether you've conducted eligible R&D activities and incurred eligible R&D expenses. You can then prepare an application form that gets lodged with Oz Industry. This slide says 30th of April, but this year, as I said, it was the 2nd of May. Then after that, you receive a registration number from Oz Industry that goes in the R&D tax schedule, which is part of the company tax return. Once that is lodged, then any refund or adjustment to the tax position will flow through that process. The value of the offset currently for most companies, so this isn't for every company, but for most companies, most startups who will have a company tax rate of 25%, the R&D rate is 43.5%, which is 18.5% above the company tax rate. So it is a refundable tax offset. How that works is if you are in a loss, if you have enough losses, so greater losses than your R&D expenditure, you would get back the full 43.5% as a cash refund. In doing so, you use up your ability to carry forward those losses. On the other end of the spectrum, if you are in a tax-paying position, your net benefit, so you won't receive any refundable component, you'll simply pay 18.5% of your R&D expenditure less tax. And so in between those 2 points, where exactly you are, how many losses you have to use will determine how much of that 43.5% is actually available as a cash refund. The most important thing, one of the most important things is obviously, are you conducting an eligible R&D activity? R&D, as per the R&D tax incentive, is not necessarily one-to-one with the R&D as it's spoken about more broadly within industry. R&D tax has a specific definition in the legislation, and we have this, what we call core R&D activities and supporting R&D activities. Now, the value of those is the same. So $1 of core is worth $1 of supporting, but you're required in your application form to break down what you're doing into core and supporting activities. There's an example there. So you may have multiple core R&D activities, multiple supporting activities that cover multiple, or that support multiple core activities. It can vary year on year. Activities can carry on over multiple years. But from a yearly perspective, it's important to the specific activities that were actually conducted in that year and register them accordingly. So a core R&D activity, there's a number of kind of sub-criteria that must be looked at. So the first thing is a core activity is an experimental activity in an area of established science. So what we're really looking for there is research in a scientific area, so a technical area. It's not so much whether people like using our product or whether we can make money off selling our product or whether a particular business model is viable. It's all about assessing or initially developing and then assessing technical functionality. The second kind of limb is that the activity is conducted in a systematic progression of work. So we talk about there having a hypothesis, having experimental steps, and drawing logical results and conclusions from those experiments. The purpose of the activity must be to generate new knowledge. That new knowledge can be in the form of a new or improved product, process, service, material, device, etc. It doesn't necessarily have to be the whole thing. So we're not necessarily looking at activities on a project or a platform level. It can be down to an individual algorithm within a broader system or a piece of functionality or a module or something like that. And we'll come to why that's important. And then the final limb there is that the outcome of a core R&D activity could not have been known or determined in advance on the basis of current knowledge, information, or experience. So what that is saying is, would a competent professional in the relevant field have known, or would they have been able to determine the outcome of the activity without also having to conduct an experimental progression of work based in a scientific area? So you need to look at what knowledge is available, what knowledge is publicly accessible, what might be available in forums or technical journals or through patents, things like that, and establish what the state of the art is and where the technical uncertainties in your proposed program of work. We also have a thing called supporting R&D activities. So the definition for those is a little bit simpler. First and foremost, they must be directly related to a core R&D. Put another way, could a particular activity have been conducted without conducting the supporting R&D activity? So that's often things like the background research, the establishment of the environment in which those experiments are conducted, maybe a little bit of project management, that kind of thing. Or increasingly now, I see the collection of data that is then used in an experiment, things like that. It might also be the production of a prototype that is subject to those experimental activities. For any activities that produce or are directly relating to producing a good or a service, there is an additional requirement for it to be a supporting activity, and that it is conducted for the dominant purpose of supporting a core R&D activity. Put another way, that is the main purpose. So if you line up all the purposes, it is the purpose that is most relevant, or more than 50%. So both core and supporting activities are only valid if they are based in Australia. So where the person is physically located in Australia at the time that they were conducting the activity. There are some limited circumstances where you can apply for an overseas finding to be able to include overseas-based activities. That would be where you can demonstrate that the activity could not have been conducted in Australia if you required access to a specific piece of equipment or something like that that was not available in Australia. A few other requirements. These are not exhaustive. This presentation is just designed to give you an overview of the program. There are a lot more specific requirements that may apply to certain sectors and not others, or more often. Yeah, just keep in mind that these are the kind of high-level ones, and then if you have any other further questions, then it's good to talk to a consultant such as myself. So you must have a minimum spend of $20,000 per year. So in a particular year, you must have spent $20,000. There is one exception to that, is where you are engaging with a research service provider, then there's no lower limit. That's something like a university or a publicly funded research organization. Generally, they're RSPs. There are also some private companies that are. You can only claim activities conducted on behalf of the company claiming. So if you are conducting activities under a subcontract for someone else, you're generating IP on their behalf, then it's more likely that they're the claimant rather than you. There is an exception where you're conducting activities for an overseas foreign corporation. This is available to companies only. Sole traders, partnerships are not eligible for the program. Trusts as well unless they're acting in the capacity of a trustee for a public trading trust, will not be under R&D tax. So it's always good to set up a company if you are thinking around about conducting R&D activities. And the expenditure that you claim must be at risk. So if you are being paid to do a particular activity by someone else, then potentially that expenditure is not at risk and you won't be able to claim it. Another area where that might come into play is if you are receiving some other government grant and that grant is payable regardless of the results of the R&D activity, then it might not be eligible. That expenditure might not be eligible because it won't be at risk. In terms of the expenditure that you are able to claim, assuming you have an eligible core and possibly supporting activities, the major areas will be contractors. So you can claim costs incurred contractors who are conducting work for you. You can claim the salaries and wages, employment costs relating to the personnel, the employees who are conducting the R&D activity. You can claim decline in value or depreciation of assets that are used in R&D activities. You can also claim other expenses such as subscriptions, materials, consumables, prototype costs, things like that, possibly some travel that were incurred in the process of conducting those activities. There's other things like overheads, rent, electricity for premises where those R&D activities are being conducted, and there are various ways to apportion those to the R&D. One really important thing to note is that payments to associates are only eligible in the year that they were paid. For most companies who use an accruals basis for accounting, you'll be able to claim R&D expenses in the year that they were incurred. The exception to that is where you incur payment to an associate. So perhaps a co-founder, you must make sure that they are paid prior to the 30th of June if you would like to claim those in that particular year. They can be carried forward. If they're unpaid, they need to be recognized and they can be carried forward. But yeah, you'll only receive the offset in the year that they were paid, or in relation to the year that they were paid. There is also a list of excluded core R&D activities that I just wanted to touch on. So these are activities that would be core activities, but for the fact they're on the list of excluded core R&D activities. So this list on the screen now is non-exhaustive, but they are the ones that are most applicable to companies that I typically talk to. So market research in the social sciences, arts and humanities, that's a big one. So potentially projects where the research question that is trying to be resolved is in the area of psychology or business or economics. You might need to look at that specific exclusion. Patenting, licensing, developing computer software for internal administration purposes only is also excluded. So that might be developing a custom accounting system or something like that is only going to be used by the claimant that might be applicable. So the R&D tax claim is initially self-assessment. So that's something that's really important to understand. If you follow the process, if you lodge an R&D application form, you will in most cases receive a registration number. And then if you use that registration number in the R&D tax schedule as part of the company tax return, again, in most cases, you will receive a refund or adjustment to the tax position. That does not mean that you are compliant, that you are eligible from a technical or financial perspective. It just means that you followed the administrative process. Where you may need to substantiate your claim is not necessarily at the point of claim itself. It may be further down the track. You have up until 5 years, or Oz Industry who administer the technical side of the program, or the ATO, have 5 years in which to conduct audit or review activity and request further information. If at that point you're unable to demonstrate that you have correctly claimed, then you may have to pay back funds previously received. So that's really important. There are some ways to get out of that self-assessment process and so you can ask the ATO to make an assessment on your activities. That's typically a more costly and lengthy process, and only required or only worthwhile if there is a question as to whether an activity or a particular piece of expenditure is eligible or not. But generally, companies will make that self-assessment. That's something that a consultant can help you with as well. Compliance is really important. On the way through that, you must obviously assess your activities and then keep records that are sufficient to substantiate the claims that you've made on the technical and the financial side in the event that you are chosen for it. One really important aspect of that on the financial side is some kind of time tracking. So being able to reliably determine who worked on what and when. And from a technical perspective, often the state-of-the-art search, how you determine that the outcome could not have been known or determined in advance is one of the areas where I sometimes see companies lacking initially. Also making sure that your kind of scientific hypotheses and experiment process are appropriately documented. This slide is just to illustrate that that kind of difference between R&D from an R&D tax perspective, more commercial or business perspective. It's important to understand the specific requirements around R&D tax and potentially keep additional outside of the normal operation of the business that are specific to R&D and are able to demonstrate that you meet the various requirements. Typically, if you get reviewed or audited, it will either be on the activity side or the expenditure side. Sometimes it could be both. This is a non-exhaustive list of some examples of the kind of records that you may keep to be able to effectively. And so we always harp on keeping records, keeping contemporaneous documentation, records that were produced at the time the activities were conducted, even though the kind of application process is retrospective. In most cases, it's really good to get in the habit of keeping records as you're going. So a big catch cry for us is evidence, not explanation. If the ATO comes and asks you, how did you determine the cost of the activities, providing evidence rather than trying to do a retrospective explanation is often a lot more effective. So that pretty much brings us to the end of that kind of basics and compliance section. One thing I just wanted to touch on is R&D Finance. So this is a relatively, or a kind of newer innovation that's becoming more popular. It's just a way of bringing the offset. So rather than waiting to the end of the year, lodging your application form and getting the refund from the ATO, there are some firms that will provide you a portion of that refund that you're going to receive at the end of the year. It makes a lot of sense where you only have a fixed pool of funding to spend in a particular year, but if you could, you would spend more. I won't go through the full kind of mechanism here, but basically it allows you to bring forward. So if I can bring forward my offset into the current year, spend it in the current year, then it not only accelerates my development, and then the uplift in terms of my total R&D claim, because I've spent more, is enough to pay back the finance costs and the interest costs. So if you're looking for a little bit of extra finance on top, funding on top of the normal R&D offset program, then R&D financing is can be a really useful tool to kind of stretch your spend. Obviously, that requires really good records to be able to make those claims. There's a few other considerations, like I said right at the start of the presentation, around that refundable amount. Where you are getting R&D finance or just looking at your cash flow, you need to understand exactly how that refundable component works, just so you know what the actual amount of refund you will receive at the end of the year. Things that might impact that are large amounts or inter-party kind of transactions at the end of the year. They can sometimes shift that profit loss ratio one way or the other. Clawback is another thing to take into consideration. So where you are getting government grants that cover costs that have been claimed in R&D previously, then there is a thing called clawback that effectively reduces the net benefit. So that takes a presentation. Fullstack, as I said, we're a full service accountancy firm that really specialize in startups, entrepreneurs, the innovation ecosystem. We really pride ourselves on being at the forefront in all the areas that are important for startups and useful to startups. So we provide accounting and bookkeeping services, virtual CFO services as well. We're also really across the early stage innovation companies, concessions, employee share plans, things like that, and other government incentives and grants. So if there's any other services that you need, then please feel free to reach out. Now, are there any questions? I don't think any came through. So thank you everyone for joining. Please feel free to reach out to us through our website or email. You can also book directly into our calendars if you would like a follow-up meeting on anything R&D related or accounting, bookkeeping. As I said, we will be sending a recording of the webinar around as well for you to refer to. I'd like to thank everyone for watching the webinar today. And just a reminder, 2nd of May 2023 is the deadline for the submission of the application for the 22 financial year. So if anyone needs any help with that, please get in touch with us as soon as possible. We'd love to help you. All right, thank you everyone, and have a good rest of the week.